All right. Daryl Willie, Insurance and Money Podcast. What's up, guys? I am clicking around trying to find what I want to say. I have it here. Let's see. What's up, everyone? Hope you're doing well. Hope all is good. Here we go. Jessica Dickler put out an article. 30% of Americans increased their emergency fund savings in 2024. All right, that's a progress. Now, we know we're dealing with inflation, right? So we know money's important. Takes more money, buy the same stuff. Now, while inflation and high interest rates are still taking a toll on consumers, Americans are able to set aside money in emergency funds, according to a recent report. Now, what is an emergency fund? An emergency fund is what you call your rainy day fund. Some people call it just in case fund. You can call it whatever you want, but it's cash sitting on the side that when stuff hits the fan, you're able to dip into it, take care of business, keep you going. Okay? It's bridge money. You got a problem? It'll bridge you from one spot, get you to the next, so you can keep on going, okay? And your life, it doesn't have to be completely disrupted because of an emergency. Medical emergencies, car breakdowns, whatever, all right? So, emergency fund. Some people say have 6 months. Some people say have 1 year. I think this all depends on who you are and how your lifestyle is, how big your family is, how big your responsibilities are. So only you will know how large that emergency fund needs to be. This year, 30% of adults said they have more emergency savings now compared to a year ago. More than half of Americans, that's a lot of people, right? More than half of Americans said they have more emergency savings than credit card debt, an improvement from previous years. Now that's a good sign, right? We gotta get that credit card debt down. The number of households reporting more savings than 1 year ago has been steadily increasing since we began measuring it in 2022. And for the first time exceeds those reporting less savings than the prior year. Okay. This is from Greg McBride, Chief Financial Analyst at Bankrate. This evidence that as the pace of inflation has slowed, it has enabled more Americans to make progress in building or rebuilding their emergency savings. Now, soaring inflation in the wake of the pandemic made it harder to make ends meet. At the same time, the Federal Reserve's most aggressive interest rate hiking cycle in 4 decades made it costlier to borrow, meaning interest rates were up, money costs more. Okay, that means your mortgage is more expensive, your auto loans, your home loans, definitely your credit cards are more expensive, right? Although inflation has eased significantly, it's still above the Federal Reserve's 2% goal. Okay, I think it's like 2.6, 2.8, something like that. Just like consumers, the Federal Reserve wants to see further cooling of inflation. Okay, Fed officials are watching closely as they contemplate their next monetary policy moves. The central bank cut its benchmark rate by a full percentage point in the second half of 2024, but policymakers have been advocating a more cautious pace, meaning slow down the cuts, okay, ahead as they evaluate the overall strength of the labor market and President Donald Trump's policy ramifications, meaning these tariffs, okay? Trump's in office now. Trump is putting tariffs on other countries, so it's not going to be, we don't feel anything. There will be a ripple effect. In remarks before the Senate Banking Committee last week, Federal Reserve Chairman Jerome Powell said the Fed doesn't need to move quickly to ease monetary policy. Okay? Now, with our policy stance now significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance, meaning to move their interest rates up or down. Shortly after taking office, Trump said he would demand that interest rates come down immediately. However, in subsequent remarks, Trump said he agreed with the decision to keep rates in place. what Trump wants, guys. He wants the Federal Reserve to lower rates and make money cheaper. But you can't just do that because we're still battling inflation sitting over top of us. We haven't gotten to that number that we're trying to reach. Now, an emergency fund is critical. Having an emergency savings account is key for weathering any sort of financial shock, which we all have, right? Research shows that having as little as a few $100s set aside greatly reduces the risk that a family will miss rent or mortgage payments or be forced to skip medical care. In addition to helping avoid financial hardship, in the short term, emergency savings can also protect long-term financial security. All right, guys, we have to be long-term minded. Do not worry about paycheck to paycheck, week to week. I need you to start thinking in years, right? Not in days, not in a week. I need you to think in years. Make decisions that affect your money financially in a positive way in years, not just week to week. Okay, according to research by the AARP Public Policy Institute, 53% of U.S. households do not have an emergency savings account, including half of people over age of 50, which makes it more likely they will trap their retirement accounts in a crisis, or they will tap their retirement accounts in a crisis. I think it will be a trap also, but we'll see. Now, how to build an emergency savings account. Here's some tips, right? For now, savers can make the most of higher rates by setting some money aside in high-yield savings accounts. All right? While the Fed putting the brakes on the interest rate cuts stinks for those with debt, it is a welcome news for savers because savers get more money with the interest rates high sitting in the bank. Think about all those years since the great financial crisis there that interest rates were zero. You had a lot of people in America who needed that income. They weren't able to get anything on their money because the rates were held down to zero. Now they're able to get more on their money because we're in a different financial environment in this country. In recent years, top yielding online savings accounts have offered the best returns in more than a decade and still pay nearly 5%, up from around 1% in 2022, according to Bankrate. Returns on high yield savings accounts have fallen from their record levels as the Fed has moved to lower rates. However, as the Fed pauses, the decline should slow as well. Schultz said, your best move is to keep building that emergency fund. Most financial experts recommend having at least 3 to 6 months worth of expenses set aside, or more if you're a sole breadwinner or you're self-employed. You own a business. Okay, you're in business for yourself. While we don't have any idea what the economy will look like in the 3 months or 6 months or a year or more, we absolutely know that building a stable financial foundation today will help you better weather whatever storm might be ahead. So there you have it, guys. Think about that emergency savings account, okay? They're saying 30% of Americans have increased their emergency savings account since 2024. So this is obviously on everyone's mind to sock away more money, okay? You do not want to dip into your 401k or any of that type of stuff because that's your money for the future, okay? This emergency savings account is for today. It's something that you can get to, all right? If you want to save it in stock, in the form of stock, that emergency savings does not necessarily have to be in cash. It just has to be liquid in a very short amount of time. And what I mean by liquid is you're converting it from what it is to cash. So stocks are a fantastic way. With these online brokers, you can maybe get some good returns on your money, putting it in a stock. And if you need to, you liquidate the stock, you use the money. If not, you leave your money in and let it keep growing. So either way, you win. All right, emergency savings accounts, put that on top of your mind. Make that dinner or dining room table conversation. Appreciate you guys. See you in the next video.